Hello everybody, it's Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at some longer term time frames on the Indian markets, in particular the BankNifty on a 15-minute with 60-minute for trend. But as usual, we start with our risk disclaimer and just remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken, they're just shown for illustration and training purposes only. Remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, but more importantly accept, that losses can and will and do unfold. No matter what trading approach you do, there always will be losing trades. Right, so this is what I want to look at today on the BankNifty, which is one of the markets in India, and this TS3 sell setup. Remember, with MTPredictor, we understand that markets go through cycles and they have periods where the markets are basically random and unclear, and you should be then waiting till the pattern becomes clearer to then decide to do your analysis. So as usual, we look to the higher time frame. Now for this, we normally look for a time frame between 3 and 5 time frames higher. So if you're looking to take a trade on a 15-minute chart, you'd go out to the hourly and then look for previous highs and lows to place your DPs off. So I just want to scroll back or use our bar replay to go back, because this here is where this 15-minute TS3 sell setup unfolded. So I want to just go back to around about here somewhere and show you what we do. Remember, we're not actually using our signals on our higher time frame chart, we're using our DPs. So if I go forward, you can see the market has made a pivot low there. So you go back to the previous high, which would have been here, right mouse click, do decision point, and there is your area of resistance. So I'll now turn trading mode off, excuse me, and you can see that the market went up and just touched that DP level there. In fact, it made a TS3 sell setup. That's an ABC correction. So if I right mouse click here, do elliott wave intermediate, you can see this was actually an ABC correction. Now with an ABC correction, it means that this is a correction against a new trend. So normally we'd anticipate that the prior trend would then continue, and the prior trend was obviously from this high here going down. So the very minimum target we should be looking for would be the DP of the start of the ABC pattern, which would be here. So we'll be looking for the market to go down into this DP support, which, as you can see, is exactly what it did earlier today. So how does this fit in with our TS3 sell that unfolded around here? So I'll go back to our 15-minute chart, and here you can see our TS3 sell coming in there nicely indeed. But can you see how this TS3 sell was coming after a move off our higher time frame resistance? So here's our 60-minute resistance. Here the market has made an initial decline off that 60-minute resistance. The market then made an ABC correction up into here for our TS3 sell. This is also on a red MTP trend. So not only was the larger degree pattern telling you that the market was going to be in a downtrend, but also our MTP trend indicator was telling us the same. So that's what we're looking for when the two different things come in and tell us the same story. So if we right mouse click on this red sell bar, do analysis, this would give you a potential trade setup. At the first target, it would be a potential 5R, or profit of a potential 5 times the initial risk. But the question being is, would you really want to come out at this initial target when we've already placed this higher time frame DP target off our 60-minute chart? Well, not really. So ideally we'd be looking to extend our target down into this area here. That was also in the area of our typical wave 3 WPT, which is great because that then coincides with our higher time frame support. So in Elliott wave terms, this would be an ABC correction. This would be an ABC correction, which was the initial correction after the initial move off an important high, which started at our higher time frame resistance. So this would be a wave 1, this would be a wave 2, and therefore we'll be looking for a wave 3 move down here. And if I right mouse click down here and I do Elliott wave major, you can see this is indeed what the software has found as well. So we'll be looking for wave 1 down here, an ABC correction into wave 2, and therefore we'll be looking to have a move into the typical wave 3 WPT, which as you can see was in the same area as our 60-minute support. So the two things again, we're telling you the same story or having the same picture, and that will give you confidence to let the market run or your trade run down into this potential support area here. So I'll just clear this off a bit to make it not quite so confusing. Just put the analysis back on, bring the target down to in and around this level here. This is where we use position sizing to keep our initial risk small. We do that for two reasons. First, for when your losing trades come through. Remember I said at the start of the video that losses can and will and do unfold. That's an important point to understand. So when the losses do come through, the losses are kept small at what we call one risk unit. But the other side of the coin is that then when the trades go with you, the profits are large, but not just large in rupees in this example, but are large in relation to the initial risk. This is the important point. You can see here the trade came down and the profit was 11.7, so somewhere between 11 and 12, 11.5 we'll say, 11.5 R, or 11.5 times the initial risk. So this is what we're looking to try and do at MTPredictor, is we're not trying to avoid losing trades, we're trying to have trades that when they unfold the profits are large, but not just in the currency you're trading, they're large in relation to the losses when they come through. So this would have been a very nice trade where the market went down to not only the higher time frame 60-minute support, but also the typical wave 3 WPT for your wave 3 swing down there, and that would have been a profit of a profit would have been available at that level of approximately 11.5 R. So a good example using slightly longer time frames on one of the Indian markets, the BankNifty, where we use 60-minute charts for our higher time frame support and resistance zones, and then we're looking to trade off the 15-minute chart. And as you can see here today, this would have been a very nice 11.5 hour profit, as shown by that example there.